Good morning. This is Larry McMillan with a stock market update on Tuesday, May 31st, before the market opens. Hope you had a great Memorial Day weekend. And the market's been having a few pretty great days, the last four exactly. And the last two have been spectacular in that the breadth and internals have been just off the charts. So has this changed our overall bearish opinion? No. The longer-term trend of the SPX is still down, and the longer-term trend of volatility is still up. So until those change, the longer-term picture remains bearish. However, this near-term activity has generated some buy signals, which we've participated in our daily newsletters. And so let's review things as they stand. The S&P rally has now exceeded the declining 20-day moving average and is now approaching the next resistance level at 4150. In fact, overnight or yesterday, the futures did trade part of the day while Europe was open. It was not a holiday in Europe. And they did trade as much as 40 points higher. However, that's all been given back, and now we're like 20 points lower. So volatility is still in this market, certainly. The resistance above there is at 4,300, and that's a pretty important resistance level. If we were to close above 4,300 and continue on above that, that could be a change of trend. Meanwhile, the equity-only put-call ratios are on buy signals. Those are coming off very oversold conditions, so those should be solid buy signals, at least for a short while. And we're, of course, monitoring those as they progress daily. Breadth has been spectacular. I mean, the last 2 days, Friday was a 90% up day. Thursday was close to that. And we've seen the breadth oscillators go from lagging and very oversold territory to now where they're all of a sudden they're very overbought. But that doesn't mean sell, as you know, that's one of our rules. Overbought does not mean sell. So the fact that these oscillators got very overbought immediately when a new upside leg is taking place in the market, that's actually a good thing. And so that could be an indication this rally, this oversold rally, has more to go. But for right now, the oscillators are still on buy signals and they're in overbought territory. New highs versus new lows has improved. In fact, we've actually seen new highs rise slightly above new lows in the last couple of days in terms of New York Stock Exchange data, but not enough to give a buy signal. And then brings us to VIX. Well, VIX is not collapsing. It didn't really get roaring away on the upside, but it's not exactly plunging while this rally is taking place. It's down to about 26, or got that low. In fact, it got down around 26 level a couple of times. I'm not a big believer in support on a volatility chart, but the VIX has bottomed out around 26 now in the last month a few times. If it broke below 26, that in itself would not be all that significant. But if it broke below its 200-day moving average at 23, that would be positive and would interrupt this intermediate term bearish trend in VIX that I was talking about. Meanwhile, the VIX spike peak buy signal that we've had in place for a couple of weeks remains in place. So the last thing we look at is the construct of volatility futures. That's taken on a modestly positive slant for the stock market. In other words, the term structure of the VIX futures slopes slightly upwards. So all in all, the oversold rally that we've talked about for a while, waiting for confirmed buy signals, is underway, and those confirmed buy signals have been in place. So now we'll see how long it can continue before it probably rolls back over to a sell signal. We put out a piece this week on the history of the 1973-74 bear market, and it's so far this market is developing in a very similar way. But there was a huge rally in that bear market that pretty much cleaned out all the bears, and then it turned extremely bearish and cleaned out all the bulls, which is typical of a bear market. Just very difficult for anyone to make money. Anyways, so we're still considering this overall trend right now bearish, with a short-term rally taking place. And I invite you to visit our website, where we do have specials on our newsletters, and you can keep up to date with these indicators on a daily basis. Meanwhile, have a great week trading.